There it is. It's down about 6% compared to a 16% drop for the S&P. And our next guest is expecting another big year for dividend payers. Joining us now, Abrdn Deputy Head of Global Equities, Josh Duitz. Josh, welcome. It's good to have you on Overtime.
Nice to be here, Scott.
The rates are going to stay up, Fed's going to stay aggressive, and dividend stocks are going to still do well. Why?
So if we look back what's happened over the past decade plus, where we've had historically low interest rates, it really has allowed growth stocks to outperform because everyone's pricing in the present value of that terminal value. And we believe this is really a change. If you look back historically, since 1936, 36% of the total return was from dividends. Since 2010, only 15%. So we think it's no longer about growth or value, but really about companies that have dividends, have cash flows, and pay those dividends out to their shareholders. And that's what we think will change. It started to change last year and will continue going forward because we're not going back to zero dividend.
Well, I was going to ask you, we don't have to go back to zero, but could we go back to anything less than what we are now if we have a more recessionary environment?
We can have lower yields, and that would I still believe that dividend names will outperform in that environment. It's only if you go back to where we have 0% interest rates or close to, plus quantitative easing, and then you have growth stocks taken off, and valuations didn't mean anything. And the valuations were just absurd for some of these names, and now it's coming back down to earth. And we think if we go back historically, companies that have dividends and can grow their dividends outperform over the long term.
Let's go through a few names to give folks some ideas of what exactly we're talking about here. Number one, Amdocs, DOX, software company.
Correct. This is a service provider to telcos. Historically, they've grown about 2% on the top line, not very much. But what's happened over the past couple of years is they've really gone under a transformation where not only they're providing back office services, but they're also now helping with 5G and cloud deployment. So the top line's now grown 6 to 10%, and the bottom line's going to grow low double digits. In addition, they've raised their dividends about 11, 12% over the past 5 years, has extremely strong balance sheet. Their contracts are about 5 to 7 years long, about 60 to 70% of their revenues are recurring. So really now this is going to be able to perform consistently at a much higher growth rate, and the market hasn't recognized that. So we believe it's undervalued for the transformation that that has happened for it. And we think it's a great opportunity to buy this name now with a nice dividend and growing dividend.
I'm sorry. American Tower, AMT, 1.7% yield.
I think it's actually a bit higher than that. Again, growing the dividend over the past 5 years, about 17%. This is great defensive growth. It's non-cyclical growth. Basically, these are the large cellular towers that allow communication for cell networks. And data's been growing 30 to 40% per year. We're in the early innings of the 5G transformation. If you think about that, if we're able to actually have 5G and machines are able to communicate with each other, like we think about in the future, and we have autonomous driving cars is going to use as much data in 1 hour as an iPhone uses in 3,000 years. The large cell towers are the easiest way to deploy and cheapest way to deploy the wireless spectrum. So we think this is a great play. They have great visibility for organic growth in the U.S., about 5 to 6%. Internationally, over the longer term, they should grow faster than that. So we think this is an opportunity to buy it. The stock got hit last year. It's inexpensive, and part of that was because of T-Mobile and Sprint. There were some headwinds due to the combination of the two, and we think that's now in the back seat mirror. So we think it's a good opportunity for AMT.
All right, I appreciate it. We'll leave it there. Josh, thank you. That's Josh Duitz joining us today in Overtime.